Memo to the Federal Reserve and the Treasury Department too. It's the dollar, stupid. Hello, I'm Steve Forbes, and this is What's Ahead, where you get the insights you need to better navigate these turbulent times. Democrat strategist James Carville, when successfully directing Bill Clinton's 1992 presidential run, coined the phrase that became the campaign's de facto slogan. It's the economy, stupid. The state of the sluggish economy was issue number one for voters. The state of the dollar should be number one concern of the Federal Reserve. Similarly, the Treasury Department and the White House should cease any and all talk of weakening the dollar as a means of improving our trade balance. Experience demonstrates that a weak dollar begets inflation and big economic trouble. Strong nations don't have weak currencies. It is indeed telling and a warning of future problems that U.S. short-term interest rates are higher than those of the European Union and Britain, even though the economies there are weaker than ours. The dollar has been feeble against the euro and the British pound. The very definition of inflation is lowering the value of a currency, usually by creating too much of it. In this case, the dollar is wobbling because markets lack faith in it. This weakness fuels chatter by the so-called BRICS, Brazil, Russia, India, China, and other countries, of finding an alternative to the greenback for international trade. If the dollar is not shored up, expect stablecoins to grow and evolve into monetary alternatives. In other words, the U.S. government monopoly on money will face high-tech challenges. People won't stand still if inflation ruins the dollar. Former World Bank President and Treasury official David Malpass puts the dollar issue succinctly. A stable dollar means stable prices. Malpass, by the way, would make a splendid replacement for Fed head Jerome Powell. Unfortunately, the Federal Reserve believes economic growth causes inflation. The institution has a strong bias against a vigorously expanding economy. This is the fundamental issue with our central bank. It is oblivious to the basic importance of a stable dollar, and so are all too many economists. Money measures value like a scale measures weight, a clock measures time, and a ruler measures length. It is not a commodity like wheat or gold. It is not similar to a stock that goes up or down depending on how well an economy is doing. When exchange rates were fixed before we went off the gold standard in the early 1970s, the free world flourished as never before. Floating, unstable exchange rates distort trade patterns. It leads to brainpower being diverted from productive uses to trying to profit from opportunities offered by financial instability. The daily volume of currency trading now exceeds $7 trillion each day. Noted economist and monetary expert Judy Shelton observes in her book, Good as Gold: How to Unleash the Power of Sound Money, that profits are found in being nimble at arbitraging fleeting opportunities in unsettled financial markets. What a waste of people's talents. President Trump is right that Fed boss Jerome Powell is playing politics on interest rates. But as the president nears a showdown with Powell, he and his team should emphasize the fundamental point that the fight is not just about current levels of interest rates, but more importantly, it is about a strong and stable dollar. I'm Steve Forbes. Thanks for listening. Do send in your comments and suggestions, and I look forward to being with you soon again.